Very good afternoon and welcome to today's uLaw webinar. The CPD webinar topic for today is Law Office Expense Management 101. And as I mentioned, it is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So for friends and colleagues joining us from these three provinces, the title would be Law Office Expense Management, and you can take that title and apply it or use that towards 1 hour of professionalism credits. Once you've completed today's webinar, you should be able to dial in or log into your corresponding Law Society websites and be able to do that. Okay. Like every other webinar, today's webinar has this very specific agenda. We're going to talk about the two broad categories of expenses that a legal office incurs, right, as part of its day-to-day operations, as part of its managing its clients, managing office expenses, running the office. And we categorize them as disbursements and business or office expenses. Okay, we're going to talk about the differences. We're going to then specifically talk about disbursements, how best to manage them. In fact, we've done a full-fledged webinar, which is again a CPD accredited, exclusively on managing disbursements. To check out our YouTube channel under webinars, and you should be able to search up Disbursements Demystified is the title for that. But today we're going to just quickly glance through disbursements and then talk about office expenses and the types of expenses and some of the quick tips of the trade, if you will, in terms of how best you can manage expenses, especially office expenses, because you're not going to be able to recover these expenses. These are part of your operating costs to run your business, and hence it's that much more important that you take extra care in terms of how you document, manage, and reflect these numbers across various different business-related reports. And last but not the least, we'll definitely talk about the expense book, which is a Law Society document, but it does cover both disbursements and office expenses in one comprehensive report. And we'll definitely touch upon the need for you to have information in your fingertips around your expenses so that you can be more profitable, you can have a better appreciation and awareness of where your expenses are heading and how best you can curtail them if you feel necessary. Okay. Before I get started, I do request everyone to mute their phone lines and use the chat window at any time to ask specific questions that you may have regarding our webinar today. Both myself and my support staff will be happy to answer those questions during the presentation. Talking about the two broad categories of expenses, we mentioned the first one being the disbursement. And to really define disbursement in a layman's term, these are expenses that are incurred by your office, legal office, on behalf of a specific client, and a little bit more specific, behalf of a client's matter. Okay? Because you may have a single client with multiple matters. One may have disbursements, the other may not. Or one may have certain types of disbursements. For example, real estate has a lot of disbursements involved in it compared to, let's say, a small claims or an ATV matter. From an accounting perspective, and this is critical, it's important, sorry, I was just letting a few of our friends in, but from an accounting perspective, it's important that you're able to record these transactions, these expenses, with certain particulars of these transactions so that you can now reflect how best you balance these books against the invoice that you would generate, which is a vehicle or a mechanism for you to recover these expenses. Okay? So really, if you were to look at your expenses in terms of court fees, application fees, maybe travel, mileage, travel time sometimes, photocopies, postage, and if these are prudent for you to spend this money, spend for these expenses on behalf of a client, then it's your responsibility to not only document and track these expenses, but also reflect them in an official document such as the invoice, so that you can tell your client the expenses that you've incurred on behalf of running this matter or executing this matter, and you're going to recover these expenses as part of whatever was the retainer terms and agreement that you've signed up for, okay? And in direct contrast, an office or a business expense, and again, I know I'm kind of preaching to the choir here, the major difference between disbursements and an office expense is the fact that, yes, it's an expense for your legal firm, but it's something that you cannot recover from a client. It's an expense that is incurred by your legal firm to operate your business, keep the lights on, if you will. But from an accounting perspective, it's critical that you note that you are responsible, and it's probably in your best interest to also track expenses as and when they happen, for two reasons. One, for a compliant reason, because if you look at the expense book, it does ask for where are your disbursements, and if you're a company that's incorporated, you pay taxes. Then there's at least in Canada, you have, of course, your various different jurisdictional taxes. So it's great for you to be able to use these, capture them, note the taxes involved, and be able to balance your HST, GST, PST, right? But from your own legal firm business ownership perspective, we're all running our businesses to be profitable, to be able to make money. An expense is a big component of your bottom line. One way you're earning your revenue from various different work that you're putting in, all the hard work. But if you're not tracking expenses, it's almost like a leaking water tap. If you're not fixing it, or if you're not taping it at the least, then you're going to be ending up that being reflected as part of your P&L or profit and loss at the end of the month or end of a specific term. Okay, so very critical for you to manage your own office expenses as well as part of that overall business ownership. Okay, so one angle, you have your disbursement, which if you don't recover in time will end up being an office expense. But you have an opportunity to do so through that invoice, or maybe if you have a trust account, then of course we'll get into that, then you don't even have to do this. On the other end, you have your office expenses that cannot be recovered. So for example, if you're paying rent, you really cannot charge that against the client file as a disbursement. You're not supposed to. You know, examples such as gas, unless it's a file related and it's part of your travel mileage, maybe yes, but rent, phone bills, whatever is needed for you to operate your business, your law society fees, right? Your insurance fees, for example, all these are great examples of office expenses that you incur to operate. The commonality between both these is there is a need for you to manage, track, and record and reflect in different formats of reporting, some useful from a compliant law society standpoint, some very important from your own business sanity standpoint. Okay, so yeah, the difference, I don't want to repeat myself here, but if you can see here, it clearly states that disbursements is recoverable, which means that you will get back what you paid on behalf of a client's file. And what happens if you don't track these disbursements? Let's say you have a retainer agreement that has a certain term associated with it, or a certain way of recovering these disbursements. So let's take a good example. You may have certain retainer agreements which says we're going to be recovering disbursements from our general account, and we're going to invoice as and when it happens. And let's say you've not done your due diligence to capture them in time, and you're reflecting them at a much later time. Then there's a possibility for your client to say, hey, you mentioned that you're going to charge me as and when it happens, you know, a couple of months have passed by, don't think it's right for me to pay you. You know, it kind of opens up to a can of worms if you're not doing it in the right time. And the other thing, as I mentioned before, it just becomes harder for you to manage your P&L and your associated jurisdictional taxes, because that can reflect and affect your overall profit margin. For those who've just joined us, the title for today's webinar is Law Office Expense Management, and that's the title that you would use because today it's a 1-hour professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Okay, so welcome. Okay, so before we go into our office expenses, let's talk a little bit more about the fact that disbursements are critical so that you don't lose out on the money spent. What are some of the best ways to manage these disbursements? And as I mentioned before, we do have an exclusive webinar on this, so I'm going to try and keep it as simple as possible. As a legal firm, and we've stressed upon this many times in many of our webinars, as a legal firm, you have this wonderful opportunity to utilize this particular vehicle or financial vehicle called the trust. Okay? So when you start a legal firm, knowing that you are a legal practitioner, you are able to ask your financial institution for a trust account. There are certain boundaries, certain rules about how best managing this, but this is where you can actually get money in advance called a retainer from your client on behalf, once you've, let's say, agreed upon and signed a retainer agreement saying you as the legal firm is going to represent this person's legal need. Whether that's as I mentioned before, whatever the area of practice may be, the cost, the magnitude may differ, but the trust as a financial vehicle remains to be the same. You take money in advance, call the retainer, you deposit that into your trust account. Yeah. Now, over a period of time, if you're able to appreciate the disbursement component that goes along with executing a file, and this is something you will certainly learn as you progress in your legal career, and you may probably already be very experienced and you have a good handle of this. For example, you know there is an application fee, a court fee, very standard certain series of fees that are associated with executing a particular file. Then one of the recommended and best practice really to safeguard your own interest so that you don't lose money is to be able to take a retainer, which typically can also include whatever may be your potential disbursement costs. So let's say you charge $1,000 to run the fee, and you've got another $200 as disbursements. So a good idea would be getting your $1,130, for example, if you're in Ontario and you charge HST, $1,000 plus $130 for your taxes, and another $200 for disbursements, all within that retainer. So it's $1,330 is really what you should be asking as a retainer. And once you have that, it's easier now for you to disperse or pay for these expenses through your trust account. And when you do so, you don't have to generate an invoice because this was never your money. You're not spending out of your general or operating account. You're paying right out of the trust account, which is money paid by the client to run their own file. Okay, so first example is paying for disbursements right out of the trust account and accounting for it when you ask for a retainer. The second way of doing that is having a retainer involved, but maybe you end up still paying out of your general account. Maybe you're collecting points, you have a business credit card that you're using. Maybe there are certain types of expenses that are not yet fluent to be paid out of your trust account. In which case, then, it's important that you reflect these disbursements, and hence tracking them again, very critical. Reflecting them in an invoice, very critical. But the importance of this is you don't wait for a client payment. You take the ownership of transferring the eligible money that are pertaining to maybe legal fees and disbursements from the trust to the general. Okay? First example, money goes right out of trust. You don't have to worry. Second example, you're still paying out of your operating account, but there's money in trust already paid as a retainer. So you're reflecting the amount of expense or disbursements that you've paid for and then moving that money through the form of an invoice and reflecting the disbursements in that invoice and just doing what's called as an eligible trust transfer. The third way of managing disbursements, of course, is where there's no trust involved, in the sense where there's no retainer, and you're just completely working out of the operating account, which means you pay for expenses out of your operating or general account, you reflect it in an invoice, and you send that invoice to your client. And the key difference between the second and the third is in the third example, you're now waiting for your client to pay you. In some sense, you don't have control over that. It's a waiting game. There are certain boundaries around how you manage these disbursements. For example, if it's a client that you know or someone who referred you and you have confidence that they will pay you on time, then that's a different situation. But often we've heard of stories where sometimes clients may not pay you in time, in which case it affects those profit margins because you've already paid for these expenses and they've already reflected in your operating costs. Okay, so 3 critical examples of how best to manage disbursements. Our recommendation all the time is at least 2, if not 1. Definitely example 1 would be ideal. But if you still have to, we would recommend highly that you still use the retainer financial vehicle, pay for these disbursements even if you're paying out of your operating account, do the eligible trust transfer. These are how you can disperse and manage them. But now what goes into managing them? What is the specific information that you need to capture that now gets reflected in what's called as ledger and journal? And this is for your law society's compliance. Because the law society wants to know how you've managed your disbursements. How have you recovered these disbursements? How much of taxes have you paid? Right? From that angle, if you were to look at it, there are certain key particulars that they're asking for. Very straightforward, very simple. Capturing when was this disbursement paid, so the date. How was it paid? Because this can be changing based on your specific example. So it could come out of your trust account, could have come out of your general account. You could have paid out of using a check. You may have paid using direct debit, e-transfer, credit card, right? So how did you pay for it? Because that particular bank numbers needs to be balanced. And because this is a disbursement that's related to a client file, the third critical particular that they want to track is what was the reason behind it? Was it a court fee? Was it an application fee? If you can just, throw some light on what was this expense for. Okay? Now, because this is client related, the next important question is, who is this client? And also because the disbursements may vary from file to file, then the next important question is, great, we know the client, but which file are we talking about? So it needs to be granular enough at the file level for you to track these disbursements or the matter. Then comes the important aspect of how much was the amount. Were there any taxes involved? Because there are certain types of disbursements where there are no taxes involved. And it's critical that you capture that. Like an application fee or a court fee, they are tax exempt. Right? So once you have found a way to capture these important particulars about every disbursement that your legal office incurs, then now you're in a position to convert them automatically into the necessary compliant documents such as journals and ledgers. So decide upon how you want to recover the money, trust, retainer, general, or straight up from the general, and find a way to capture all of the important particulars across a disbursement. Okay, so this is really your starting point. And we've spoken about this before. The fact that in example 3, you're waiting for a client and you're really at their, it's not in your control anymore because they may sometimes take longer than sometimes anticipated. Again, that's why a clear-cut retainer agreement is that so much more critical, because you can clearly state that if they don't pay you or pay your disbursements on time, mentioning what the consequences are is very critical, right? So if you are able to, we recommend that you pay directly out of the trust account, so that now you are in control, at the least have a retainer component, so that you, even if you pay out of general, you can do the eligible trust transfer. Okay? And of course, the question about when do you recover these expenses is purely based on your retainer agreement and what you've agreed upon in that document. If it's as and when it happens, you have the right to right away generate an invoice. Sometimes we have legal firms just generating invoices that are disbursements only, because for certain areas of practices, the disbursements may come much ahead of even some of the legal fees that you may have to charge the client. Okay? So purely based on the agreed retainer or engagement letter. And some examples, if you will, of the types of disbursements that are best suited to be paid out of trust and best suited to be paid out of general. So if they're based on actuals, then we highly recommend, of course, trust. Because what you paid is what you're recovering. You paid $100 for an application fee, you're getting the $100 back, then that's perfect. But if there are certain types of expenses where you're looking for a profit or a loss margin, let's say you have a standby or someone else who's representing you and you have to pay them, maybe you are taking a bit of a loss margin on it, or if there's certain software that you're using and you're now spreading that cost across clients, and if there's a certain profit margin that's being associated, or maybe there's photocopies that you're recovering with a certain profit margin. Wherever it's not really the actual that you're recovering and there's a mark up or a mark down, prefer to use general. Wherever it's purely based on actuals, you have the opportunity to use the trust account. Okay? Rule of thumb. Perfect. You've done all the great work of tracking them, reflecting them, recovering them. Now what? Here's the final step where all the piece of information. So we've just talked of one example, and if you're dealing with 100 files, and let's say all the files have disbursements, then you're capturing 100 different transactions with their own particulars in a date range. So let's say in a month you have 100 files, all of them have disbursements associated with it, then you're dealing with a document that reflects 100 line items in it. Each line item carrying its own particulars, and the top documents that you have to reflect in an audit or during your own compliance management consist of your trust ledger, your general ledger, your trust journal, especially the trust disbursement journal, the general receipt journal, and the general disbursement journal. So again, we've discussed the differences between ledgers and journals in another webinar that talks about Law Society compliance when it comes to financial record keeping. For example, journals ask for a little bit more information that ledgers typically don't ask for. That meant, in terms of method, how was this paid, and what was the purpose. It's more so towards, and who did you pay this to? These are additional particulars that are more captured in a journal compared to a ledger. Whereas in a ledger, you're capturing, of course, the date, the reason or a particular, and the amount. Okay? Now you can always Google the bookkeeping compliance guide across all provinces, and they have different templates, different examples of how they want these ledgers and journals to be documented and reflected. If you look at legal accounting software that are purpose-built for this, including uLaw as an example, these reports are readily available for you to download and print as long as you're capturing the data. And the last one that they talk about is the fee book, because the disbursement is a part of that invoice that you're charging the client. So all that we've discussed so far are related to disbursements, the way of recovering these client or file-related expenses, and some best practices around when to raise them, how to recover them, and the particulars of tracking the information across these disbursements. Okay, so now we'll focus or talk about your office expenses. As I mentioned earlier, these are not related to client file expenses. These are related to you managing or operating your business. Okay? Expenses incurred for keeping the lights on in your legal office. So what are the types of expenses that you may incur? Again, you already are preview to this because you're living this life. But anyone who is just getting started, just for you to have a quick laundry list of the types of expenses that you should expect, starting with, if you're going back, and we're slowly going back to the new old normal, don't even know how to call it these days, but there's a new normal, and it involves meeting people, which is great, and it may go back, for some businesses, going back into a physical space, and in which case then all of this again becomes meaningful, such as furniture, having rent towards a physical space, stationery, maybe purchasing your laptop, computer, printer, definitely your law society fees, whether you're paying it monthly or yearly, your phone bills, your meals, advertisement, promotion, all these are all part of that office expense. And depending on the type of business setup you have, whether it's a solo business, incorporated, then your tax consultant may be able to give you better appreciation for, how best you can write off these expenses. Okay. Bank charges, dividends are also part of those office expenses. So if you find a bank charge, again, typically when you're just getting started, if for whatever reason your bank takes away money on behalf of a bank fee from your trust account, we highly encourage that you catch it early and inform the bank to use your operating account, because that's an office expense. Okay. So even if you have a bank fee charged against your trust, we encourage you that you really catch that error. Most of the times it's a bank error that's reflected, but if you can catch it early, keep a tab on both your trust and general account, reviewing it at least once a week at a minimum. And of course, your salaries, the expenses to pay others in your business, other vendors, other colleagues, employees, all that are good examples of office expenses. How to record them, when, and what are the pieces of information needed. Now these are office expenses, and like any other expense, they happen to have a date or timestamp associated. Of course, you don't have to deal with timestamp, but you certainly want to keep a tab on the date. So when did this expense occur? Right? So that's part of the when. What was this expense about? So giving it a nice name or title or a brief description, it just makes your life easier when you're looking at these expenses and you're not staring at a number, not knowing what this was for. Because when you look at your bank statement, often, depending on the financial institution you're working with, often your bank statement is going to say like a crazy alphanumeric title and then give you a number. So 65.56. Right? So if it doesn't have certain meat associated with it, doesn't have a reason with the title or a brief description, it just becomes harder for you to reconcile it at the end of the month. Hence, when you're using a bookkeeping system or any system of record, whether it's a legal accounting system or an Excel sheet, then take advantage of the fact that now you can expand on the reasoning behind a certain office expense. So, like a court fee or an application fee, understanding whether this is, a stationery or a computer purchase just makes it easier. Now, the type of expense. Now, this is purely to manage or have a better categorization of expenses so that you can now understand where you're spending most of your expenses. It's not a compliance need. It's more of your own business management need. So if you're able to categorize your expenses under at least the top 5 categories, you could have marketing that could include advertisement in it. You could have office supplies that include stationery and everything else under that. You could have law society fees, errors and omissions, insurance. So top 5 or 6 categories, or even, the more the merrier, but depending at least having the top 5 or 6 categories. And let's say the next time you're purchasing paper, you're saying, okay, I've purchased this on the 12th of November, and I've purchased this for an A4 purchase of A4 sheets, and now you're putting it under your stationery or office supplies. Just makes it easier for you to understand that your office supply expense is slightly higher. And when you reflect on it at the end of the month, you may have your own reason for it, but at least you have an appreciation for the various different categories and where those expenses stay. The amount, very critical. Understanding if there are any taxes involved with that. Because unlike, or depending on the type of expense, sometimes you may have expenses with varying taxes. Say if you purchase something out of the country or out of the province, sometimes you may have various different taxes involved. You're not just paying local tax. So capturing expense with those variations of taxes, very critical. How did you pay this for? Again, this is very critical. If you're a sole practitioner, and sometimes if, let's say, you paid for expenses out of your own pocket, then it's a different way of recovering that money. If you've incorporated your business and you've personally paid for money, let's say you step into Walmart to purchase paper, you, for whatever reason, didn't bring your business credit card, and now you used your own personal money to pay for it, then now the business owes you that money back. And hence, capturing the method of payment as either owner's pocket, if you paid for it, or business credit card, if that's how you paid for it, is very critical to, again, manage the reconciliation and how much of money the business entity owes you, the individual. Okay. Now, of course, details or any way to track the details of these expenses becomes critical. So if you're paid out of check, then knowing the check number. If there's an electronic method of payment, then capturing whatever was given to you as a receipt number or payment. Or sometimes if vendors provide you invoice numbers, then at least entering the invoice number. Again, all of this is to help you understand what this expense was when you're looking at it 2 to 3 weeks later than when you paid for it. Of course, who did you pay this to? And this is something that you capture even in the disbursements, right? If you're paying court fee, you're paying to the Ministry of Attorney General, paying application fees, sometimes Ministry of Finance. So very similar. If you're paying the Law Society fees, are you paying to LSO, Law Society of British Columbia? Who is that Law Society that you're paying to? And how do you record them? Now, with the advent of technology, especially around the legal space, legal tech, you could see tremendous improvement in the tools that are offered for you to manage these expenses and track them and reflect them right away without you having to do a lot of work. So it's just a matter of doing your due diligence, finding out the right tools that can help you with this. But today we have tools, including uLaw, that allows you to enter them as and when it happens individually. You can capture them as part of a bank import at a later date. So maybe you're not the type who captures office expenses every evening on that same day. We have clients who do that. We have clients who do this on a weekly or a weekend basis. They capture all the expenses that have occurred that particular week, and they just import it. Or if you don't have too many transactions, you can just enter them one at a time, right? But if you have a lot of transactions and you're catching up at the end of the month, then a bank import becomes simpler. But we've also introduced newer features where it can directly connect with your bank, and now you don't even have to import bank statements. You can pretty much connect with your bank and the bank, and then you can just bring that information into your system. Okay. Just like how you had disbursements, certain rules, certain ways of governing them, tracking them, and reflecting them on specific compliance documents, you have certain documents that are needed to be maintained to manage your office expenses as well, such as your expense book. Because the expense book, as I mentioned before, does capture both disbursements as well as office-related expenses. Okay? So you can draw your attention to this particular expense book. You could see, let me quickly annotate. You can see here when there's a client name associated with this expense, it's a fax for this particular Joey Tribbiani matter for $135, including tax. Whereas then you have an office expense for a purchase of your BMW car, right? So you being able to capture various different pieces of information is very critical. Then comes your HST, GST, PST payable, your expense statement. That's more for your own business management. Your P&L, which talks about the expenses incurred, which reflect the P&L. And in some cases, depending on the type of business that you operate, you may also have a borrowings report, because that's also part of that expense management. Okay, but typically we've seen expense book, any jurisdictional tax payable, P&L, and of course the expense statement. Not so much for your disbursement, but most certainly for managing your office expenses. Another critical component is to not only manage them, capturing them as and when they happen, but doing them in a way that you can analyze this data at your fingertips. Or if I can rephrase that, whether you have the need for it or not, you have the tools necessary to empower you with that capability today compared to the capability that existed even a few years back. So this is just a way of reminding you that you have the power in your fingertips. Tools today offer great analytical capabilities right at your fingertips. So there's no excuse for you to not stay on top of your expense management. So having a plan of action of categorizing expenses, reviewing them periodically, and having the right tools to reflect that and bring it to your attention is very critical. I'm sure you've heard of apps that financial institutions provide you that every time, this is for the common man, not even for businesses, so you can set your own target in terms of how much of expense you're paying, and once it reaches that threshold, you get notified, right? You can categorize even your own personal expenses. So the accounting software has, of course, evolved to that point where you have the opportunity to analyze this data in further detail. So knowing that your stationery expense is higher this month compared to last month, maybe your rent is higher this year compared to last year. So having that data and then being able to make informed decisions is just going to make you smarter as a business owner. Okay? And yes, we often do talk about the benefits of not a specific software, but a type of software, which is the legal accounting software, especially for practitioners here in Canada where compliance is critical. And we talk about how best you can take advantage of legal accounting software that pretty much does both client-related expenses and captures office-related expenses all in one single easy platform. Okay, so if you're in the market looking at tools, we encourage you to first start off exploring the use of legal accounting software that can pretty much give you that double whammy effect of managing client-related information, including client-related disbursements or expenses, as well as office-related expenses. Okay? Okay, so I'm going to take maybe the next 10 to 12 minutes to utilize the uLaw platform just as an example of how you capture this and how you reflect it so that you have a better appreciation for what goes behind managing expenses in your legal firm, and maybe compare and contrast how you're doing it today. Maybe your practices and processes are better. Maybe there's room for improvement. So I'm going to shift gears, and I will maybe take a short break. I could see a few questions being asked. So please do use the chat window to ask any questions that you may have regarding our webinar today. Okay. I think the question was around the title, which I did mention it briefly. I'll bring it to your attention. I do apologize if the email was sent out a bit later. For whatever reason, let me check with my team as well. But typically we do have notifications sent out earlier. But for those who haven't, we encourage that you also, if possible, download what we call as the Ula Toolbox, which is a Chrome extension. If you are using the Chrome browser, you can Google Chrome extensions and search for uLaw and install it. It's free, non-hindrant. And what this does is you can set up your reminders for your Friday CPD sessions. And this would notify you right on your browser anytime there's a CPD involved. Okay, and we'll set your reminder around 1:50 on that Friday afternoon. Okay. Alrighty, so I'm going to utilize, as always, my fictitious legal practitioner, Roger Moore. So here's the uLaw account. And I'll focus my attention. Let me create a client. Let me choose a client that I recently created, Gregory Brown. So this was a client that I worked on this morning, and I'm going to go ahead and click on the matter. As you can see, I've already created a matter. I've also got a retainer. I've got the first example of a retainer for $1,000. Okay. And I'm going to start afresh. I'm going to delete all the dockets and disbursements that existed and start afresh. So let me take the first example for this matter where there's a retainer involved. So we'll start with disbursements and then move into office expenses later. As I mentioned before, disbursements are specific file, client and file related. So in this case, this disbursement would be specific to this small claims matter for Gregory with the file number 209. I'm going to go into retainer and disbursements. You can see the option adding a new disbursement. So let's look at the three examples. The first example is paying your disbursement right out of your trust account. So if you've, let's say, written a trust check for your application fee, you could say paid from trust. Let's say it's $200. You wrote them a trust check number, and you paid this to, let's say, it could be Attorney General, and you're now clearly notifying which trust account did this money come out of, or will be coming out of. And you can see we've also captured the date. Okay, and we hit payments. Now you notice that the trust receipt, which was originally $1,000, has right away come down to $800. There's no need to generate an invoice. There's no need to reflect that. It's gone. Okay, so if I come into my compliance and go into my trust ledger for the month, here's Gregory Brown, which is the client we were talking about right here. Right? There's two things that have happened in his trust account. If I go into trust, I see those two transactions. One, earlier today, or actually on the 8th, $1,000 was received as part of a retainer through an email transfer. And then today, on the 12th, a disbursement was directly taken out of the trust account for $200 towards an application fee. That's exactly what we see here in the ledger. On the 8th, the $1,000 was received. On the 12th, we had a $200 disbursement, automatically leaving your trust balance at $800. So even if you were to close your books today and reconcile for the month, this $800 contributes to your overall trust listing. Okay. Now let's take the second example where there's a retainer component, but you're paying this disbursement out of a general account. So you'd say add new disbursements. Instead of now paying it or withdrawing it from trust, you're now withdrawing it from your general account. So let's say you're paying this out of general. You tell us the date, still critical. Maybe the court fee. What was the pre-tax amount? Was there any tax? You can say tax exempt if that's the case. And how are you recovering this expense? Because you paid for it out of your operating account. And this is where it's critical to note if there's a profit margin or not, right? So maybe you're charging the client $200, maybe it cost you $250. Happens. It sometimes happens depending on the type of business, type of expense. So if there's a profit or a loss margin, or maybe it only costed you $150, right? So the top part is where you're telling how much the actual disbursement was that you're going to charge your client. The bottom part is reporting that because you're paying for it yourself. So reporting what that actual expense was back to your own business. And this is all critical. We're actually capturing pretty much all the particulars that both ledgers and journals are going to need to reflect in their documents. So who is this paid to? Ministry of Attorney General. Where did it come out of? So this could be your general account, could be your credit card, or it could be your own pocket money. Not sure if you would actually pay for this out of your pocket money, but this could also be you paying another employee for accounts payable. But let me just take the simple example of it coming out of your RBC account for debit card. If you don't have a reference number, you can always put the date. And you hit save. Now keep an eye on the trust receipt and keep an eye on the disbursement. The trust receipt did not drop because you've not yet done the trust transfer, but there's a disbursement component, and more importantly, uLaw is now indicating that you can actually generate an invoice because you can recover the $200. You go ahead and invoice. As you can see, we give you the ability to recover all the documents in disbursements, or only the disbursements, or only the dockets. So very flexible in terms of how you can recover your money, depending on whatever you've agreed in your retainer or engagement letter. Now, once I have reflected that I've paid for this $200 through this invoice, which has an invoice number associated with it, then you can do what's called as a trust transfer. So I click on my question mark, and you can see automatically we're indicating to you that there's a $200 trust transfer that is eligible. Sorry, maybe I was a bit too fast. I'll go back again. So I use the shortcut, the question mark, or you can just go to the old school way of hitting action and saying trust invoice payment transfer. They're all the same screens. We just have different fancy ways of getting there. Again, legally compliant because you can't transfer a penny less or a penny more. It's exactly what you reflected in the invoice. And from your trust account, moving it into your general account, and again, also includes jurisdictional rules. So if it's an EFT and Roger Moore is in Ontario, you can see there's a Form 9A automatically available. Now, if I go back to that matter, you can see that the projected balance is $600. Okay? So you've recovered the money by moving the money from trust to general. And if I go into my back end in terms of reflecting this in the trust, client's trust ledger, and I'll also generate the journal, and then we'll jump into office expenses. Now you have the third data entry, which is the trust transfer for the court fee of $200, leaving your balance in trust at $600. By going to my client trust receipt, trust payments, now keep in mind if there's different types of disbursements for different types of legal files. So for example, in real estate, you have examples where you can just import all your expenses, right? So you can just say import, and you can connect to banks, or you can say this is a conveyancer fee, it was a lawyer done deal fee, it was different types of fees. You can just import them because it's just harder to enter one at a time, right? In which case, all those transactions, once you've done it, can automatically be imported into uLaw and then reflected. You can see in my trust receipt, it talks about the $1,000 that I received. Likewise, if I go into my trust journal for payments, and while I'm at that, I'll also download the expense book. So there you have Gregory versus Adam, the $200 that was paid towards the court fee, and the $200 that was paid towards the application fee. Okay? The two expenses or disbursements are automatically reflected. Last but not the least, the expense book talks about $200 that was paid. Because this is a general, captures automatically that. And if there are any taxes, it captures the taxes too. So that's how reflecting disbursements that are client file based are captured in a legal accounting system such as uLaw and automatically reflected in the back end in the form of compliance documents without you having to specifically work and generate it. In direct contrast, if I were to go in and look at office expenses, today everyone that's using uLaw are pretty much getting convenient with connecting it. So this is a brand new feature, of course. I'm not trying to showcase the feature, but this is really the way things have become. So if I were to import my bank statement, I can connect my bank with the actual financial institution, right? So we have connectors that allows you to connect your bank account with your actual bank. And instead of having to import a file, you can look at your bank statement, which will clearly tell you all the expenses that you incurred, right from United Airlines flight to various different payments that you made. Then you can make an informed decision whether it was an office expense, disallowed expense. We of course nail down the date. You choose the category that expense is in. The taxes. Where the money comes out of. And then confirm that that expense was towards this reason. So you're taking the information from the bank, which only has the numbers and who was paid this to, and you're giving it a reasoning. So now you can see in my account, I already have the $78 being reflected as an expense. And if I go into my compliance, do my expense book, you can automatically see that as a part of the business expense, you've got that touchstone climbing of $16.47 plus $9 of HST. So whatever you reflected here automatically reflects in that. It also reflects in your P&L. So if you go into my expense sheet, and let me start the P&L. I will say for this month, you can see the revenue and the expenses. Clearly tells you what the percentage is. You've got office supplies, client expenses, and in terms of analytics, you can really look at your expenses in terms of categories. You can compare and contrast it with previous months. We've done a full-fledged webinar on this as well. Okay, you can see your disbursements are higher than office expenses, which is great because this is a very healthy expense book because most of this are recoverable. Okay, so whether it's client-related or office management-related, you have the ability to capture all these expenses with particulars as and when it occurs or after a date range by importing or choosing an import file or directly connecting with your bank or just adding them one at a time. It's all the same screen, right? You can do this one at a time. You have pre-tax, post-tax, who you paid this to, where did this come out of. And it's as simple as that. As soon as you've captured it, the system takes care of all the reporting needs that you need behind the scenes. So each and every report where that expense needs to be reflected, both compliant and business related, happens automatically behind the scene. Here it is, in a template and formatting that's best suited for the audience that's looking at. Okay, so once again, just wanted to draw your attention through this webinar that there are different types of expenses that you will incur as part of being a legal business. And if I were to broadly categorize them, both on client file-related expenses around disbursements and office management-related in terms of office expenses, we looked at the various ways in which you can manage these expenses, the particulars that need to be captured, and how best you can recover disbursements, and how important it is to analyze expenses that are related to your office. So with that, I will draw this webinar to a closure and open up for any questions that you may have pertaining to today's webinar. Yeah, the bank feature is a pretty new feature in the system. It allows us to make it easier for you to import information. Please do reach out to us at support@uLawPractice.com, and we'll be happy to help you with that process. It's a very straightforward process. Also, for the early bird who are adopting it, it's at no charge. So take best advantage of that as well. I'm going to stop the recording because this is more compliance related.